Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Dividend King Genuine Parts Company has seen its stock absolutely crush the market. It's up about 26% in total returns over the past year. That's not just better than the market, which is down about 15% over the same period. It puts it in a leading class against some of the other auto parts suppliers it competes against. We're going to talk about the business right now, whether or not it's the best buy in the industry, and frankly, it might not be. I'm Jason Hall. This is The Smattering. Tyler Crow's here with me. Genuine Parts Company is a dividend king. That means that it's paid and raised its dividend every year for at least 50 years straight. And again, great year. It's up 26% in dividends and returns from the increase of the share price. Tyler, I think there's some things that are compelling about the business looking forward. 2023, we know the economy is at risk. We're probably already in recession. It could get even worse with rising interest rates. Now, for Genuine Parts, this is the owner of Napa. It also has a business that supplies parts and supplies to industrial buyers, restaurants, food prep companies, a whole line of businesses. Is that in recessionary times, people and businesses tend to cut back on discretionary purchases, less likely to buy a new car. A business is less likely to invest in new equipment. The flip side of that is that you end up spending more for repairs and maintenance, right?
It's a reason why Genuine Parts and kind of the auto parts retail, auto parts distribution has been one of the more lucrative parts as an individual investor to be a part of in the automotive industry. Overall, the automotive industry has never been one of the best investments, just historically speaking. But this particular segment of auto has been a real winner for most investors.
A lot of investors probably are looking at Genuine Parts right now. Again, it's had a great year. It's positioned pretty well, and I think it's probably going to be, if not a great stock in 2023, I think it's probably going to be fine. Again, based on the tailwinds, the headwinds for everybody else will be tailwinds for it. And the fact that it has been a strong business. But as stock investors, you and I know invest the same way, that you have to think longer than just a year because there's so many factors that can come into play. And the reality is there's a couple of competitors that have been better investments over the long term and are likely to prove to be better long-term investments from here than Genuine Parts.
Yeah, a lot of the times we talk about why the market is wrong or why the market is mispricing something. And sometimes that can happen for a really long time. But that said, there are also things where over a long enough time period, the market is telling you something about how a company performed. Since the mid-90s, early 90s, Genuine Parts Company has generated a total return of 1,810%, which is great. Like, you hear that and that sounds wonderful. But compared to the total return of the S&P 500, it's about 1,480%. So it's a market-beating performance. And
that's a pretty substantial amount of actual money better, right?
But now let's compare two of its competitors in the same space. Over that same time period, they were talking about since about the early 90s, I'm looking at charts right now, AutoZone, one of its biggest competitors, has generated an 11,300% return. O'Reilly Automotive has generated a 34,200% return. And what this is saying, what this suggests is that Genuine Parts is a good company. It generates value. It creates wealth for shareholders and can do what the market does. But there is something a little bit extra in the secret sauce to what AutoZone and O'Reilly have been able to do over the years that has generated superior returns. Whether that be the fact that they focus much more on the retail aspect of it. They don't have that parts distribution, kind of that what you were speaking of in relation to Genuine Parts being more than just Napa, right? O'Reilly, AutoZone, they are just the storefront. They are the retailer. And at the same time, O'Reilly and AutoZone, I do not believe that O'Reilly pays a dividend, but I do know that AutoZone does not. And both of these companies have focused much more on share buybacks and reducing shares outstanding as the biggest driver of long-term shareholder returns for them. And that has been one of the big things in the secret sauce for these companies is the exposure to the retail, much higher than Genuine Parts, and then using its free cash flow, using its excess returns to reduce the total shares outstanding. And basically, for every share that you own a greater percentage of the company. And it has borne out over the long term. Now, you could say, well, maybe it's just because, O'Reilly and AutoZone are priced, at a much bigger valuation than Genuine Parts. And, maybe if you're buying Genuine Parts at a discount, you can do better now, but that's not necessarily the case. Right now, Genuine Parts has a PE ratio of 20, not super expensive, I would argue not cheap, but not expensive. But at the same time, O'Reilly, PE ratio of 24, AutoZone 19. It's not like anyone here is priced to perfection, priced dirt cheap. And if you are having to make a choice, I think track record for these matters.